Good day. Ira Epstein of Linn & Associates with your metals market update, and this is for Monday, and we're at the 19th of August, 2019, just after 5 p.m. Central Daylight Time, and guess what that means? It means that the prices you're already seeing are for Tuesday's session. Remember, the markets open on Globex, which is where the vast majority of electronic futures trading takes place at 5 p.m. Central Daylight Time. So gold is down about $4.50, silver down 7 cents, copper backed off today another 20, platinum down a little. So what's going on? Well, as usual, the markets are looking for information, and the problem is the info they get is the same thing over and over. We saw over the weekend that Larry Kudlow and Robert Navarro were doing their talking on behalf of the president. Then today we saw that Huawei was given a 90-day extension. I don't think you read anything more than that's what happened to it. The A-team went out there, said, we're talking, maybe things will be on track. And Huawei, you've got 40 companies or so in the U.S. that have telecommunication systems that they still need servicing on. These aren't in the big cities. They're typically rural. The president had nothing to lose by extending that. Where we have to watch is what goes on with Apple and Tim Cook having the conversation with the president, explaining to the president what happens as these new tariffs kick in, and that's a little different. But when we look at the gold for the week, first day of the week, we're down $12 so far. Okay, you're right off the all-time high. I keep saying all-time. The recent high-time close. I'm so used to gold not being over $1,500 an ounce. I'm wrong to say that, and I apologize. But on the weekly chart, the bias is up. We're in a little bit of a correction. On the daily chart, I've been pointing out that we have distribution going on in this type of pattern, and the market's still doing that. The reality is, when you look at the swing line, it turned down. You've got lower highs, lower lows. That's a downtrend. The market is over the 18-week moving average of closes, so the bias is up. I contend the two knock each other out. The market can easily fall back to that number, but I don't see the trend having ended on when we come to the longer term charts, these weekly charts. You'd have to go really far down to turn anything down, even though that's a closing chart. When I take a look at Bollinger Bands, when we had broken out to the upside, you got this pattern where you went over it. Then we started drifting back, and we're in what I call that drift now. The market's absorbed that one move that we had to the upside. Now it has to figure out what to do, and momentum is waning. So as momentum wanes and you lose what's called an embedded reading. An embedded reading is when you have the numbers, and by the way, that was lost on the close of trading on Monday, which is today, but on the Tuesday trade, it's even being lost a little more. But if you go back prior to that, these numbers were all over the 80s. That's called embedded. And as long as that stayed in place, things are fine. When you lose the embedded reading, as you've done here, it is not uncommon for price to want to make a run at that 18-week moving average of closes, which is where I think you're at right now. Watch in the morning GLD. It's getting dangerously close to it when it reopens, losing that number. Now, because this market won't open till the morning, it still has the embedded reading. The pattern is one of a higher high but a lower low, so it's not trending per se. And it too is in this general drift, if you will. Longer term, still don't see anything bearish. Maybe you get back to that 18-day moving average of closes to fight a battle. Where the more bearish picture has been there, and it's been there now on a regular basis, is GDX, the miners. You've got the lower highs, the lower lows. You finished up on Friday, if you take a look at 28.28, literally right on the 18-day average of closes. And with today's punch, you're adding bearishness to the market. You could be setting up the potential for the lower Bollinger Band. If the market rallies, I'd look for the resistance at the 18-day average. And to break the pattern, you have to take out 29.09. The gold-silver ratio is still favoring right now the gold market over silver. Whenever you see this number, these closes over this red line, it means that the silver is losing to the gold. This represents how many ounces of silver in a perfect world, no commissions and so on, that you'd have to use to get 1 ounce of gold. And when you look at the silver, you see the correction taking place. You've got the lower highs, lower lows, but I will contend this 18-day moving average of closes in both the gold and silver is an interesting pullback in these markets. I'll be watching them. I was just reading on the news wires too that one of the major banks is saying that within 6 months from now, they think that it'll be the industrial metals that are on fire, not the precious metals. I don't know why they're saying that, but that's what they seem to be saying. I don't see that if they don't get a U.S.-Chinese trade deal or any of these U.S.-Mexican-Canadian deals done. That's a problem, and somebody better talk to Congress, get some of these goods passed. In the copper market, this was a contra-trend rally. All that you did is you moved from a big break right through here, got back into the Bollinger Bands, and now you're running at the 18-day average of closes. Should this market get under this 250, what is that, 258.30 right here? 258.20. You could actually flash all kinds of new sell signals in this market in terms of the trend action. You have lower highs, then lower lows under the 18-day average. You've had, past tense, a correction where you're no longer into what? Oversold territory. Now, obviously, I'm wrong if the market starts getting up and staying over the 18-day average of closes. Problem is, I'm not seeing that occur. I'm seeing the opposite. In the platinum market, I looked at this as a bear market rally off the challenge of the Bollinger Bands, making a run for the 18-day average, likely to fail against it. I'm wrong in my thinking if you take out the highs back here in the 860, what is that? That high would be specifically 870.20. But you haven't done it yet, so the bears are in control. Look for battleground between the 100-day average in green and the 18-day average of closes. In the palladium market, this market fought its battle. I want to use past tense. I was pointing this out last week. You got to be careful right here. This is a market that suddenly decided the 100-day average was its friend, and it fought a battle for about a week and a half, 2 weeks, and it's now starting to break out to the upside. It does have the lower low and the higher high, but you got momentum up, bias up. You've got to take out that 100-day average and scare me with that to think that this market isn't in the thralls of a bottom. And in the dollar index, we're getting a rally, but I would expect again that if you hit that upper Bollinger Band, you're going to see substantial resistance. So far, each time it's done it, you pull away from it. You did it here, you pulled back. I can go on in the chart action as to what it did. So I think you're approaching a resistance point in the market that I'd use a lot of caution with. And we'll be writing about this in our financial reports and the like, and I, of course, cover a lot of this daily, twice a day, in fact, when I write for my subscribers, my twice daily commentary. And in it, I do a lot of financial work. I let our firm do most of the writing in these other markets. We've got a big crew here, and they're quite good at it. They like me to do more of the financial stuff, and that's pretty much what I enjoy too. But we cover all these markets, and here's the coolest part. If you have our trading platform, ideally our QT platform, you will hear all day long different comments from people writing on these. They're talking to you. If you missed the commentary, it's not a problem. It's a recording. It'll play right back for you. And you can go according to the different categories to see what they are. So pretty interesting information. In this day and age, it's hard to find information that's easy to access and specific a lot of time to the futures markets. I think you'll find that with our products. We'd like to show it to you. It's really simple. Just go to our website at www.iraepstein.com. You can also call us, of course, but you'll see our free offer. You'll see our new page, and it's got a free offer tab on it. Click the tab. It takes you right there. We've made everything easier. You can also click right here if you're watching me on YouTube. It'll take you to our home page. I'm Ira Epstein. Hope you sign up for some of this, and I'll talk to you tomorrow.